How would you feel making 115% profit of your initial investment within a short period of time? And you could go as 5 times of that when you add more pairs. Well, the strategy I'm about to reveal in this video is not only tested, but also trusted, as it yielded an amazing result on 200 back test made. I will back test it 200 times with an initial account size of $1,000 and with a 1 to 1.5 risk reward ratio. If you want to know the back testing service I'm using, then it is called Trading Rush. And it's officially the best to practice with and absolutely free to use. You can also find important lessons on the app or on their website. It is easy to use and also safe. Thousands of new and professional traders make use of the app. Without further ado, let's quickly jump into the strategy for the day. So we're looking at the Litecoin United States dollars chart, and this is the 4-hour charts. This strategy is a life changer, but also a bit tricky, so watch till the end to fully understand, because one mistake could ruin your trade. So for the strategy, we would be using 3 amazing indicators. Let's go ahead and add the first one. For the first indicator, let's search for MACD DEMA. This one right here by TOF. And for the second indicator, let's search for Moving Average Ribbon by Jacob Amos. Now for the third and last indicator, let's search for the ADX and DI by Bikabu Oyaji. So let's head over the settings and make some adjustments. We're going to double click on the Moving Average Ribbon. Nothing would be changed on the input as they work perfectly well for the strategy. But go over to the style. I would be increasing the opacity for all this moving average for better visualization, as we would want to notice any change in any of the moving average. When you are done, you should go ahead and click on the OK button. Now let's make some adjustment on the ADX-DI. For this indicator, we would be using only its ADX, as we don't need the directional moving average. So go ahead and double click on the indicator. I want you to untick the DI plus and DI minus. Then go ahead and change the level to a straight line for better visualization. When you're done, click on the OK button. And for the last indicator on the list, double click on the MACD. Move to the input and change DEMA Court to 10, change DEMA Long to 25. After that, I want you to head over to the style, untick the histogram. Then go ahead and increase the opacity for the Linge MACD and signal. Also, I want you to untick the plot, and when you're done, click on the OK button. Okay, so the chart definitely looks much better. Before we get into the trading rules, let's actually understand what these indicators are and how they work. So first of all, let's start with this moving ribbon average. And by the way, this is going to be our first confirmation indicator based on its signals. We're going to place buy and sell orders if the rest of our conditions are met. This indicator makes use of different moving average like the EMA, SMA, DEMA, HMA, WMA, ZLEM to identify the market trend. That is to say that it does issue more accurate buy and sell signals during trending market conditions, because its measurements are based on different type of moving average and not just measurement based on a single type of moving average with different value. As you can see, this indicator has different lines on the chart that looks like ribbon. When all the moving average are in green, it confirms there is a strong bullish momentum in market and the market is trending in an upward direction. And the same goes for a bearish trend, which occurs when all the moving average are colored in red, signifying that the market is moving in a downward direction. The general rules are simple. If we get all green MA, it means the buyers outweighs the current sellers in the market. And if we get all red MA, there are more sellers than buyers in the current market condition. The second confirmation indicator we're going to be using is this MACD, double exponential moving average. It's just like the MACD we all know, only that this is using a double exponential moving average to calculate its movement. As you can see, we got rid of its histogram, as we would be using just the zero line and the moving average of the indicator. Now for this indicator. When the blue moving average crosses above the red moving average, it shows a bearish reversal movement. Then when it crosses above the zero line, it shows a bullish trending market. Exactly opposite is said for a bearish move. When the red moving average crosses above the blue moving average, it shows a bullish reversal movement. Then when it crosses below the zero line, it shows a bearish trending market. This indicator is going to help us filter the signals from our main entry indicator. And now, for the last indicator on the chart, the ADX. As we would be using this indicator to confirm when the market is trending and when it's not. Make no mistake, as this strategy consists of 2 parts when entering a trade. But the ADX will be considered only for one part of the strategy, while the other two indicators are used for the continuation trade. Okay, so for a long position to be valid, we need to have all the moving average ribbon colored in green. Secondly, our MACD has to cross above the zero line, and the blue line has to be above the red. And lastly, our ADX needs to be above the zero line as well. Before we go ahead and place a buy stop order at the peak of the trigger candlestick, our stop loss would be at the second bottom of the moving average, while our profit would be 1.5 times the risk. For the continuation trade, we need to have at least 5 moving average change to red in an existing bullish trend, and our MACD has to be below the zero line. If and when all moving average ribbon changes back to all green, and we have the MACD crossover below the zero line. That is to say, the MACD blue line crosses above the red line while both still remain under the zero line. We will go ahead and place a buy trade at the peak of the trigger candlestick. This is the situation where we do not consider the ADX as a factor for entering a trade, because we are taking position already in an existing long trend. Please, if you are enjoying the content, do leave a like and subscribe if you haven't done that, as it motivates us to drop more strategies for free. Back to the video. Exactly the opposite is true for a short trade. For a short position to be valid, we need to have all the moving average ribbon colored in red. Secondly, our MACD has to cross below the zero line, and the red line has to be above the blue, and lastly, our ADX needs to be above the zero line as well. Before we go ahead and place a sell stop order at the bottom of the trigger candlestick, our stop loss would be at the second top of the moving average, while our profit would be 1.5 times the risk. For the continuation trade, we need to have at least 5 moving average change to green in an existing bearish trend, and our MACD has to be above the zero line. If and when all moving average ribbon changes back to all red, and we have the MACD crossover above the zero line. That is to say, the MACD red line crosses above the blue line while both still remain above the zero line. We will go ahead and place a sell trade at the bottom of the trigger candlestick. As we said earlier, ADX is not a factor for entering a trade, because we are taking position already in an existing short trend. So before we continue, let's go over some examples to help you better understand how we take trades with this strategy. Here we see that a new trend is about to form. Right here was a buy signal, because all moving average are in green and the ADX is above the zero line. Although the MACD is above the zero line, we won't take this trade, because the trigger candlestick was at the point the red line crossed over the blue line in the MACD indicator. So this trade is void. Here is another example where we would be taking a short continuation trade. So we see that price retraced during the downwards ongoing trend. As we can see that 5 moving average changed to green, and also, the MACD is above the zero line. Just wait for the next trigger candlestick as we have here. With the required cross needed, we will go ahead and place a sell order here. And as we said, our stop loss on continuation signals are at the recent swing high, and our take profit remains 1.5 times the risk. You can see how smooth the trade did. Please remember that the ADX is not considered when taking a continuation trade. And this next trade is not valid because the MACD is below the zero line, even though we got 5 moving average ribbon signal. Here is another example where we would go short. As we see the MAR gave us a sell signal, and the MACD also confirming the signal. We had to wait on the ADX for a confirmation that the trend is strong enough before we enter the trade. And we got our trigger candle right at this point. So we would go ahead and place a sell trade here, with our stop loss at the second top moving average, as take profit remains 1.5 times the risk. Now let's go ahead and backtest this strategy using our account size of $1,000. Now for the purpose of this video, I would be sticking to a flat-based stake. But if you are trading in a life account, please always use a proportional staking plan as it is better than a fixed risk exposure. So we just finished the back testing for this strategy, and we can see that the results are amazing. We had a win rate of 71% in 200 back tested trades, having won 142 trades and lost 58, which made us 115% return on investment. And I found those wonderful trade setups within 3 years. You can as well try it out in other pairs. Although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the back test. So you definitely want to expect that number to be lower when trading live. The profit factor for this strategy is looking good, I guess. And we had 10 wins in a row against 5 losses in a row. So yeah, I'm definitely happy with these results. Okay, traders. That's it for today. Thanks for watching, and see you in the next one.